Indonesian economy has showed a strong sign of recovery from the COVID-19 pandemic, but growing uncertainties in the world could affect the recovery trend.
In its latest World Economic Outlook, the International Monetary Fund (IMF) left its forecast for global real GDP growth in 2023 unchanged at 3%, but cut its 2024 forecast to 2.9% from its July forecast of 3%. The IMF cut its growth forecast for China and the Eurozone and said overall global growth remained low and uneven despite what it called the remarkable strength of the US economy. In domestic level, the Indonesian economy has showed a strong sign of recovery from the COVID-19 pandemic. However, the Indonesian economy is predicted to still face uncertainty in 2024, influenced by various external and internal factors. External factors that trigger uncertainty in the Indonesian economy include the Israel-Palestine and Russia-Ukraine conflicts, as well as the threat of climate change that could disrupt the food supply chain. Inflation and interest rate hikes, as well as the economic slowdown in China, Europe, and America are also expected to impact global economic growth. The slowdown of exports, weakening of the rupiah exchange rate, and general elections are also predicted to pose challenges to Indonesia's macroeconomy in 2024. Deputy of Development Policy at the National Research and Innovation Agency or BRIN, Yurike Patricia Marpaung outlined several economic opportunities for 2024 during the discussion, Kompas reported. The 2024 general elections is predicted to increase the consumptions of non-profit households, institutions, and government consumptions. In addition, there is also the policy of mineral commodity downstreaming, which will increase the added value of the industrial sector and boost export value. The anticipated risks that need to be anticipated include investment that are predicted to slow down as investors wait and see the results of the presidential elections. Additionally, a global economic slowdown is also predicted, particularly in developed countries due to strict economic policies and the threat of El Niño, which can slow down the pace of imports and exports, Yurike was quoted by Kompas as saying. Economics lecturer at the Faculty of Economics and Business at the University of Brawijaya, Munawar, is optimistic that the Indonesian economy will continue to be good as long as the political system remains the same. This is based on the relatively high and stable economic growth over the last 20 years as a result of a political system that tends to be stable. In addition, Indonesia is also supported by a wide range of domestic markets, rapid growth of the middle class, demographic bonuses, and abundant natural resources. However, Indonesia also has various weaknesses that can hamper its future economic growth, including weak infrastructure that must continue to be addressed.
Well, the Indonesian economy has showed a strong sign of recovery from the COVID-19 pandemic. However, global economic slowdown and rising geopolitical tensions may affect the country's economic outlook this year. Now, our guest this afternoon, Bapak Josua Pardede, Chief Economist at Bank Permata, will share with us the challenges and opportunities in 2024 political year. Hello, Pak Joshua.
Hi, how are you? I'm fine, thank you, Luisa.
Thank you for joining us via Zoom on our conversation today, Pak Joshua. First question, the Indonesian economy is expected to grow within the government's target of 5% in year 2023 despite rising global uncertainties. Can you please share with us what are the main challenges facing the Indonesian economy for this year in 2024?
I think the main challenges in 2024 for Indonesian economy, especially in the first half of 2024, will arise from both domestic and international sides. Domestically, I think uncertainty related to the 2024 election will trigger a wait-and-see approach among investors. This could hamper GDP growth to some extent. And then from the international side, the risk from high for longer or persistence global interest rate at high level, this also likely to occur in line with the tight labor market in the U.S. market, in U.S. economy, despite the inflation trending downwards. So this will make the Fed more cautious in determining the timing of rate cuts. So on the other hand, the market is already anticipating a rate cut in March 2024. So this may introduce uncertainty regarding the direction of global interest rates. Yeah. So furthermore, I think the risk for the higher for longer will lead to the global economic sentiment, will lead to the global economic slowdown, and then it will further decline. It can be indicated by the further decline in the commodity prices, and ultimately this will have adverse impact on Indonesia export performance, leading to the risk of widening current account deficit in 2024.
Now, Pak Joshua, while the global economy is still yet to fully recover this year, we know that geopolitical tension is still on the rise. What external challenges could seriously affect Indonesia this year?
Yeah, although the global geopolitical tensions, particularly in the Middle East, may impact global oil price from the supply side, we tend to believe that the impact will be limited due to the overall weakening global economic slowdown, yeah, in line with the global economic downside risk. Yeah. So we project that the world oil prices, for example, like Brent price, will continue to move below $80 per barrel throughout 2024. And we feel that the external pressure are likely to have significant impact to Indonesia is still coming from higher for longer interest rate from the U.S. Central Bank, yeah, especially in the first half of 2024, because the combination between the global economic slowdown and then the high for longer stance from the U.S. Central Bank, this will lead to the slower investment, yeah, global investment. Not to mention, again, investment will be also affected negatively by the wait-and-see sentiments ahead of the election 2024.
Of course. Now let's talk about another concern, which is exports. The Indonesian exports have dropped for more than 10% year on year as of November last year. Do you think that this fall in exports will be even bigger this year?
Yeah, I think in terms of growth, export contraction is likely to diminish in 2024, although it still indicates a tendency for export performance to continue weakening. As we noted that until November last year, the export value continued to slow down due to the normalization in export commodity prices, for example, like CPO, that already down by 10% last year. And then coal price also slowed down more than 60% last year. So we're expecting that the normalization in the commodity prices will continue to happen in this year. But the improvement from 2023 is more due to the low base factor in 2023, resulting from the high base in 2022. So we predict that the decline in commodity prices will continue in 2024, but the decrease is expected to be not to be as significant as in 2023. So we see that the main risk to the export performance this year is the global economic slowdown, in line with the predictions of reversing economic growth from accelerating to decelerating in our major trading partner, such as US and also China.
Pak Joshua, just now you already mentioned about the presidential election, and we all know that the election is just around the corner. Do you think, in your opinion, that the election will bring a positive impact on our economy?
Yeah, we see that the presidential election are more likely to have a neutral impact on the Indonesia's economic growth. On the one hand, election can indeed boost domestic consumption in line with the increasing government expenditure related to the elections and the implementation of populist policies such as the increase of the social assistance and then coupled with the policies to control, to manage the food inflation, which can enhance the household consumption. That we note that household consumption already accounts more than 50% of the economy. So, but on the other hand, elections will trigger the wait-and-see approach among investors, especially foreign and private investors, regarding investment and business expansion. But I think the good news in 2024, I think the government remains committed to continue the National Strategy Project or PSN, mostly infrastructures, and then new capital city of Nusantara. This could boost the public investment.
Well, with the election coming up, investors are all very giddy and very nervous about what's going to happen in the future. And many analysts predict that this investment will decline during the political year, at least during the first semester, as investors are still waiting for the result of the election. What is your prediction?
Yeah, we also see that the impact of election on investment activities is likely to occur in the first half of 2024. However, the impact will be more noticeable on the performance of investment from private sectors. But we tend to observe the investment activities from the public sectors, actually, as I mentioned earlier, from PSN and then IKN, to continue to in line with the President Jokowi directions. So therefore, although we anticipate the wait-and-see impact on investment performance overall, we believe that the negative impact of inflation on private investment could be compensated or could be offset by the increasing public investment.
Well, let's see what's going to happen after the general election. As for now, Pak Joshua, with so many challenges, namely the rising global uncertainties, global growth slowdown, and also the election year. Last question, Pak Joshua, what is the general outlook of the country's economy this year, and can the country's economic growth be maintained at 5%, or even, as what some of the presidential candidates have mentioned, aiming at 7%?
So we still expect that Indonesian economic growth in 2024 will continue to exhibit resilience, and then it's expected to continue to grow by 5%. Compared to last year, also will be the same at around 5%. This is supported by the Indonesia's economic structure, with over more than 50% driven by domestic consumption, as I mentioned earlier. And this is supported by the Indonesia's economic, supported also by, as you mentioned earlier, also with the current inflation rate that already within the target range of Bank Indonesia and also is expected to remain within the target range throughout this year. And that we anticipate that the improvement in household consumption growth in 2024 compared to last year. The potential weakening of investment performance due to wait-and-see approach can be offset by the increase in the public investment in infrastructure. And then going forward, for the government expenditures, also is likely to rise during the election period. However, on the downside, I think the export performance is expected to remain weak, and it may improve compared to the previous year due to the low base effect. So all in all, we are still expecting that the main contributors from the expenditure side coming from the private consumption or domestic consumption, followed by the investment, and then from the supply side or the sectors, we're still expecting that the manufacturing sectors like F&B, like for the petrochemical and then downstreaming in nickel products, coupled with the agriculture and then trade sectors, also one of some sectors that also could lead the economy in this year.
Okay, so we look forward to what's going to happen later on this year. Thank you so much for your insights, Bapak Josua Pardede, Chief Economist at Bank Permata. Thank you for joining us here at Economic Outlook, and have a good day.
Thank you for having me. Thank you.